four of the best experts, including Sandip, that's going to moderate a discussion. Again, I think everyone's worried what's happening in the world with Russia, China, Iran. There's so much to unpack. That's why we have a full hour. If it's okay, we're going to save questions for the end. We do have a mic, so raise your hand. We'll get a mic to answer any questions. So without further ado, let's kickstart the conference and introduce our good friend Sandip Bhagat, Chief Investment Officer of the Whitner Trust Company, a multifamily office. So let's give a big round of applause, and Sandip, we'll get you on stage.
Good afternoon, everyone. On behalf of Opal Group, but more importantly, on behalf of my fellow panelists, we're delighted that you have joined us for this Alternative Investing Summit. You have an exciting 3-day conference ahead of you, which couldn't have started off better than with this group of panelists. I'll spend a couple of minutes just to give you a quick overview of where we are, how we got here, and what might lie ahead, for all of which questions our panelists have all the answers. So what a difference a year make. The market turmoil in 2022 stands in such sharp contrast to what did we have last year? We had a utopian mix of stimulative policy, low volatility, and high returns. This year, however, persistently high inflation has led to tighter monetary policy and slower growth. So the Fed has raised rates by almost 400 basis points. They have reduced their balance sheet by almost $400 billion, with more to come on both fronts. These inflationary pressures have originated from both pent-up demand and supply-side shocks. So for example, the war in Ukraine has lasted longer than most people had expected, and China's zero-COVID policy further disrupted supply chain logistics. All of these events have conspired to do a number of things. It has pushed back the peak in inflation. It has created a hostile environment for risk assets. Investors have had no place to hide. Even bonds have failed to be a safe haven. And it might look like alternative investments have avoided the brunt of the damage, but that may perhaps be as attributable to the lack of a mark-to-market value approach than to truly uncorrelated risk profiles. So we stand today at a very important juncture in the evolution of this bear market. The calls for a recession in 2023 have become universal in the last few weeks. And the reasons, the arguments to support that point of view appear to be well justified. Growth is slowing. It seems inevitable that housing will slow under the weight of rising rates. The entire yield curve is inverted. The Fed is nowhere close to cutting rates, and the global economy is in even more dire straits. So this macroeconomic backdrop has led almost everyone to characterize the stock market rebound that we're in the middle of as just yet another bear market rally.
Yes.
Well, what do we know about stocks? We know they can go up higher after the yield curve inverts and before a recession sets in. Even after the Fed engineers the first rate cut, they're known to go down for an average of 6 months and by about 25 percentage points. And finally, no stock market has bottomed before the onset of a recession. So most believe that the equity market is poised to either retest its previous lows or make new ones. So this is pretty dire and depressing. So I'm going to ask you for some help. To set the tone for the rest of the conference, you'll be together in this room for a long time, also to help our panelists frame their remarks. May I ask you to join me in a quick interactive poll? I will ask 3 questions, and if you could answer that with a show of hands, that would be great. Question 1, do you expect a recession in 2023? Almost everybody said yes. There were a handful of people who said no. Will this then be a deep and protracted recession? And let me quickly calibrate. Let's call protracted to be more than 6 quarters, and let's call deep to be GDP growth of minus 2% or less through its duration. Oh.
Wait, is that for protracted?
Sorry?
Is that for protracted?
For deep.
Deep and protracted. Those are the parameters. So it's a minority group. There are about, I'm going to round it up to a half a dozen people who fall in that camp.
There should be an answer for not sure. There'd be a lot of those.
Okay, so everyone else, I mean, if you said no to the deep and protracted, you were in the not sure. Not sure could be no recession, short and shallow, but we might digress. And finally, will the equity market make a new low?
Hit a new low.
Yes.
Will the equity market make a new low? That's about a third of the room, maybe more. And so I'm going to close out my comments. We have a lot of ground to cover, but I want to do that by offering a contrarian point of view that I'm personally intrigued by and somewhat sympathetic to. And it goes along the following lines. All of the factors that were listed above were clear negatives, right? They will have the effect of slowing growth down. But what we see around us is an economy that is remarkably resilient in the face of high inflation. So far in 2022, real GDP growth is running above 2.5% in the second half. For the full year, nominal GDP growth has averaged a whopping 8%. The consumer is remarkably healthy, the job market is strong, profit margins and earnings have held up really well. And I know the skeptic will immediately push back and say this is going to get a lot worse next year under the lagged effects of monetary policy. The 400 basis points are going to start and bite. But then that brings us to this question, which is, yes, that is true, but to what extent? So could it just possibly be that the inherent strength, the latent strength of the US economy allows growth as it slows down to get close to zero, but not a whole lot less than that, so that the ensuing recession, if it happens, ends up being short and shallow. And if it does, then perhaps the stock market might react in the following manner. Viewing that recession to be imminent, short, and shallow, it may be willing to look through the next 12 months and beyond to the recovery that might follow. Stocks are prone to that. They look ahead. And in every cycle in the past, stocks have bottomed before the low points of earnings, employment, and economic growth. So that's quite a handful. It really is one of the most complicated backdrops that I have experienced in my career. I'm speaking of 30 or more years. But not to worry, because I couldn't think of a more distinguished group of panelists to help us solve this intricate and complex mystery. So I'm humbled, I'm honored, and I'm privileged to be on the same stage with these folks. They actually need no introduction. I was asked to come up with brief ones, so I'll give it my best shot. Jen Bawden is a true bear market expert, and she has called a number of them, 5 of the downturns in the past, correctly. Her views have been written up in a best-selling book published by Penguin Random House, which has sold in 27 countries in 7 different languages. She is amazingly talented, so she has co-founded companies in homeland security, alternative energy space, prolific speaker, philanthropist. When I saw the resume, I actually called Dan Meeder. I'm like, are you sure you guys didn't make a mistake and combine the bios of 3 people into this one little document? That's Jen Bawden. To her right and my left is David Walker. David served as the 7th U.S. Comptroller General in 2 different administrations under President Bush and President Clinton. He has since been a professor of the economics of national security at the Naval Academy, and he also now sits on the board of he's a member of the Defense Business Board. And last, certainly, absolutely, positively not the least, to my far left is David Deptula, who is a former lieutenant general in the U.S. Air Force, a distinguished career of 34 years, both as a leader, a general, but also active in combat. Flew more than 3,000 hours, 400 of them in combat, planned the air attack in Operation Desert, in 1991. So I am, sir, going to make eye contact with you to express mine and our sincere gratitude for your service in protecting our lives and keeping us safe.
Thank you.
So we'll get started. Jen, it looks pretty tricky and murky out there. Has the market made its lows yet?
No. Despite some bear market rallies ahead, as you mentioned, I don't believe we've seen the big capitulation in the markets yet, not even close. You'll know when we hit this capitulation because all the institutions will be in mass panic and they'll be giving it a name like Bloody Monday. It will resemble the decimation we've seen in crypto over the last few weeks. We've also seen when the stock market goes down, crypto follows, gold follows, pretty well everything that can be sold for margin calls gets sold. And the dollar rises when everybody rushes for safety. I think those are two really important things that we need to really understand as a basis going forward with these choppy markets, as you mentioned. As the dollar rises and everybody rushes for safety and everything goes down with it, what happens is that we have some big black swans that are going to get caused by this. So it's all interconnected, and as one thing goes down, the next goes down. And as for the biggest threats that could cause this capitulation, as I mentioned, everything is so interconnected that it bleeds over to the next, causing major collateral damage. There are smaller issues like housing bubble created over the last 2 years, another massive derivative bubble nobody's talking about yet, a credit card debt bubble, massive inflation that is not transitory as far as I'm concerned. NATO is being pulled into war. We're going to hear more about that from you, Dave. We've really, I'd say, got a lot of interesting things, black swans, but in my humble opinion, the biggest debt bubble in the history of the world is going to pop at some point here. Lower interest rates have caused everyone to borrow, and now they have to pay their debt back at a much higher rate. Many companies are loaded with debt, student debt, countries, homeowners, companies. The higher interest rates are a heat-seeking missile to suck the tide out and expose the house of cards for what it is. We saw in crypto in the last few weeks how quickly this downturn can happen. When the bubble bursts, those with cash and no debt will be able to pick up amazing bargains in the rubble. Higher interest rates are kryptonite for debt bubbles. They put a massive strain on borrowers, and soon the pin could pop this massive, massive debt bubble. And yes, consumers struggle to pay higher interest rates on their debts. The freezing up of credit markets like we saw in 2008 is another threat. And for the science and number geeks in the room, I cite Newton's law that tells us to any action there is always an equal and opposite reaction, or simply what goes up does come down. For instance, unprecedented quantitative easing and super low interest rates have pushed the markets up by many trillions of dollars. All things being equal, which of course they are not, one metrics would be to expect that they could come down by an equal amount. Low interest rates started in 2008 when the Dow was at 10,000. It climbed to about 36,000, and now it's less than 2,000 off its high. Yep, I think we could go down a lot further just from those metrics alone. What we have in our favor is the fact that we are distanced from the troubles in Europe and China, and so capital is flowing into safer lands like ours. And we are the world's reserve currency for now. I think Dave will talk more about that later. The weaponizing of the dollar to spank Putin and the latest fiasco of the high dollar devastated the British pound and caused havoc worldwide with big spillover effects. This coming avalanche of global debt defaults is not under control. You will know it's here when the words debt restructuring and debt forgiveness are commonly heard. Pretty simple. What has gone up due to artificially low interest rates will now come down due to higher rates. And this includes housing, even though top analysts say it will be flat. around the time the windows will open and the Fed will start the merry-go-round all over again. At some point when you start hearing the words debt restructuring. Thank you.
David, can we tee off Jen's comments about the efficacy of quantitative easing? It has been such a popular central bank tool. It's the panacea for all ails. And it really hasn't spurred a lot of economic growth. It has created asset inflation on the other hand, and valuations that are sometimes scary. Your thoughts on the whole policy?
I'll start with monetary, and at some point in time, let's come back to fiscal, because both are imprudent and unsustainable in their present form. There's something called modern monetary theory. How many people have heard of modern monetary theory? Well, let me briefly explain what it is. Modern monetary theory is something that says that deficits and debt don't matter as long as you can borrow in your own reserve currency, unless and until you have excess inflation. Now, let me tell you a few problems with modern monetary theory. Number one, it's contrary to history. Number two, it's contrary to long-established economic principles. Number three, it's based on a false comparison to Japan. And number four, newsflash, we have excess inflation. The truth is that both the Congress in the last 2 years have been following modern monetary theory, and in addition, the Federal Reserve has been enabling modern monetary theory by keeping interest rates too low for too long, but more importantly, by buying trillions of dollars of U.S. debt directly rather than going to the market. And you're right, they've curbed their appetite, but they've got a long way to go. Their balance sheet has grown dramatically in recent years. And when they end up buying all that debt, that serves to hold down interest rates, but when they have to start disposing that debt, that's going to be a pressure to go up. On the Fed, real quickly, they're in a tough spot.
Yeah.
Because on one hand, they'd rather not cause a recession, although I think we're going to have one. We can debate how deep and how long, but I think we're going to have one. And secondly, they're supposed to try to maintain stable prices over time. I would respectfully suggest this. One, the Fed is not as independent as it used to be, especially when it's time for reappointment of chairs of the Fed. Secondly, the Fed's primary role should be to maintain stable prices over time. They're in the lead. That's their primary job. Congress can't and won't ever do that. Secondly, they should focus on promoting macroeconomic growth to provide more opportunity for all. And they should not be in the business whatsoever of dealing with short-term unemployment. The problem that we have with unemployment has nothing to do with the Fed. It has to do with education policy, it has to do with immigration policy, it has to do with welfare policy, it has to do with things that the Fed has absolutely nothing to do with.
General, it's been a pretty quiet year on the geopolitical front, so this is a twist and a curveball. I'm going to change the conversation topic. We should discuss Tom Cruise's Top Gun Maverick.
Much better
in the F-15. No, I'm just kidding.
It's the Navy.
Actually,
That's the Navy, not the Air Force.
I was up in Chino yesterday and saw his P-51. It's very nice.
Yeah. No, it's been a heck of a year. So what stood out for you? If you had to recount and rank, say, the top 5 developments in 2022, what might they be?
Well, I think right up top, everyone would not find it a surprise that the first one was Russia's invasion of Ukraine. That's had a huge impact already, and there's more to come. Some of those black swans that Jen spoke about may come out of that conflict. The second one is China's growing aggression in the Taiwan Straits, as well as what you've been witnessing over the last couple days, and that's the suppression of its people in China. Number 3, North Korea's deluge of missile launches. And the downside of that is people have now been accustomed to what Kim Jong-un is doing, and it's like, okay, so what? There's another missile launch. That portends some potential dangerous actions on his part because he seeks the attention on the world stage. So anticipate a nuclear test anytime soon and perhaps even more dramatic action. I'd rank number 4 the protests in Iran due to the regime's internal repression. And of course that, along with their support to Russia, has killed the administration's attempt to resurrect the nuclear deal. In my humble opinion, wouldn't have done a whole lot in terms of stopping them from their march toward acquisition of a nuclear weapon. And then to round out the list, I'd go to talk about and highlight the growing number of cyber attacks that are increasing in scope, scale, and sophistication across all business areas as well as personal and government. So that's my top 5.
Which of these will likely have kind of the longest impact? And I mean, I'll start with the first one that you named, right? The war with Russia. There just doesn't seem to be any easy out. There's no room for negotiations. Somebody has to save face on the way out.
First, I think you're correct in that right now there is no room for negotiation. I mean, first, one of the things I'd caution everyone that we tend to make mistakes about in this country is we have this tendency to mirror image and ask questions in the context of, well, why isn't he doing this? We do that. Putin has absolutely no regard for his people. And so he's willing to throw them into a meat grinder. At the same time, you all are very well aware the just absolute horrendous atrocities he and his forces have committed. So I raise that because it solidifies President Zelensky's position in not wanting to go to the bargaining table either. So right now, there aren't going to be any negotiations. Either Russia wins or it loses. I'm less concerned about Russia picking a fight with NATO. They are surprised with respect, and when I say they, I should say Putin has been surprised with the absolutely terrible performance of his military. I'd suggest to you that's due to horrible leadership, not well-trained forces, marginal equipment, and doctrine that they're employing that is more reminiscent of 1939, 1940 than it is the 21st century. But there's a lot to unpack there. I'll stop there because we could spend this whole hour just talking about Russia, Ukraine.
Can I follow up briefly on that? I think we'll see how Ukraine plays out, but I think one of the things that we have to look at is what are the lessons learned from Ukraine as it relates to other challenges in the world, in particular Taiwan. Let me give you a few basic points. First, believe it or not, in the 90s there was an agreement called the Budapest Agreement that the United States, the United Kingdom, Russia, and Ukraine signed, where the United States, United Kingdom, and Russia provide certain security assurances to Ukraine in exchange for Ukraine giving up its nuclear weapons. Ukraine had the most nuclear weapons outside of what now is Russia in the former Soviet Union, so they did. That was not a treaty, that was an agreement. That agreement was obviously worthless because in 2014, Russia took Crimea and the West did nothing. If you want to deter aggression, you have to take steps before the aggression occurs. And so one of the real lessons is you arm the people and you train the people before the aggression occurs in order to discourage. So let's go forward to, and by the way, and Ukraine is a sovereign nation. And it's recognized in the international community as a sovereign nation. So let's look at Taiwan. Taiwan is not recognized in the international community as a sovereign nation. There is the Taiwan Defense Act, which, by the way, is not a treaty. It's very unclear what our commitment is to Taiwan. But Taiwan, I would respectfully suggest, has a lot more strategic importance potentially to us and other Western nations because they are the #1 manufacturer of high-end chips and semiconductors, okay? They are an island. Let me pose a question. If the United States wanted to invade Cuba, and we don't, I've been there, we don't want it. But if the United States wanted to invade Cuba, which is 90 miles off our shore, do you think China could stop us? Taiwan is 100 miles off China. Now, it's a very different situation. You know, China doesn't have naval forces positioned over here. But one of the things we have to recognize, there's a difference between what you can do and what you should do. And there's a difference between a treaty and words. And by the way, I think the re-election of Xi to another term and his professed desire to reunite is something we need to be concerned about. And I would respectfully suggest that the Chinese, rather than necessarily invading Taiwan as a first step, could think about doing something different. It's called a blockade. I'm not saying they will, I'm saying they could.
David, you have the stage. So, short of long-term structural fixes to either monetary or fiscal policies, in the now, here, in the present, what are the Fed's options? So, specifically, what terminal rate are they likely to pursue? When will the first rate cut come along? And in so reaching these milestones, will they make the proverbial policy mistake or misstep and make the recession worse?
Well, first, I don't know what the terminal rate's going to be. Let me tell you what I think the trajectory is, and I think you just can't limit it just to the Fed. You have to also talk about the political situation and the fiscal policy situation. The Democrats have retained the Senate. They may or may not retain Warnock's seat on Tuesday. We'll find out. Either way, they've got the Senate because at 50-50, Kamala Harris, the vice president, can cast a tie-breaking vote, and they have control, so they'll control the agenda, chairs the committees, et cetera. The Republicans have taken the House. I think it's likely that McCarthy will be the next speaker. They need to work things out, and I think he ultimately will be the speaker. The fact that the Republicans control the House will mean that the profligate spending will end. Now, don't get me wrong, Republicans have been irresponsible about spending too. There is not a party of fiscal responsibility today. The last fiscal responsible president was Clinton, and we got a serious problem we've got to come to grips with. So I think what the Fed is saying is, look, we were going to go 75 basis points for several more times. Maybe we're going to ease off that a little bit, okay? Maybe we're going to ease off that a little bit. Unemployment's not a problem now. To the extent, in fact, labor participation is very low right now. And a lot of that is because of demographics. A lot of that is because of skills gaps. And a lot of that is because the government paid people a lot of money not to work, okay, if you will. And our welfare system, by the way, is way more for people that are poor or near poor or disabled. I mean, we subsidize people in some areas making up to about $135,000 a year. And last time I checked, that was a lot higher than the poverty rate in the United States, even in some big cities. So I think they're going to try to they're going to try to slow the rate increases, okay? They're going to not buy any more treasuries. They're going to try to slowly dispose of that. That's probably the lag indicator, slowly disposing that. And we'll see how things play out with regard to the economy. But again, I tell them, don't worry about unemployment. That's not your job. And frankly, the law has to change to get that out of their charter.
Jen, you talked about how Wall Street could be getting it wrong, is most likely getting it wrong, but how will this affect Main Street?
Well, I'd like to just start with the Fed's got it wrong before. As a matter of fact, the Fed's caused the problems that we have right now. So we know that the Fed is going to cause more problems in the future. We know that the Fed is not going to get it right. And I agree with Dave 100% that the Fed is between a rock and a hard place. I think most of the room agrees that now it looks like we will be going into a recession. And I know that right now, a lot of things look still pretty good. As Dave just mentioned, there are a lot of people that have jobs. Jobs are not an issue. The spending is still up. But I ask everyone in another quarter, when all of that has fallen to the wayside, and when consumers are getting laid off en masse, and when unemployment is now going through the roof because of the recession that's looming ahead, it's going to be harder for them to pay their mortgages, to pay their rent. Their credit card debt is going up exponentially, causing almost everybody to stop buying housing, in my opinion. So I do believe housing, and of course, you've got to pay much higher rates. People are just going to say, I'm just going to stay, because they're going to think that it's going to come down quickly, because everybody is telling them that it's transitory. Well, it is not transitory. These high inflation, for what Dave and I have been pretty well shouting from the rooftops since 2007, New Year's, going into 2008 when we met, is that if you don't put much tighter restrictions on the money supply, you're going to get inflation. So, and inflation also can be very good. It's a secret tax that stifles everyone else, but it helps the US government to pay off their debt. I would say that Wall Street is mistaken. If they think it's going to 2%, it's not. Consumer spending is going to really take a crater in the next quarter. I think that's going to change everything. That's going to bring the market down. Everything is super connected, and crashes happen very quickly. There's a saying on Wall Street, stairs up, elevator down. These newly minted statistics, let's fast forward to 5-6 months from now, even 3.5 months from now, we're going to see that when the statistics come out on all the new numbers, it's going to plunge the markets, and when the markets plunge, that everybody rushes for safety, and that sets the dollar on, pushes it up, so the currency really affects world trade and affects 80% of this world does trade in the dollar. So when the dollar gets pushed up and the commodities are sold in dollars and oil is sold in dollars, thanks to our petrodollar, a vicious cycle of inflation begins again. So as Dave said, this is not just a quagmire, it's going to be a really sticky, difficult problem for the Fed to fix. For instance, the whole world is macro, all the macro pieces of the world are totally interconnected with each other now. As we've seen in the last year, what's happened with the war. I mean, we've seen how food prices went through the roof. So, for instance, I'll go to Turkey. When Turkey decided not to change and follow us in quantitative tightening, and in 1 year, their food prices doubled. This is a vulnerable, very vulnerable house of cards, and it's going to import massive inflation to the rest of the world. Governments with unsustainable debts worldwide could implode if the Fed keeps raising. Our debt to GDP is out of control, and I know Dave's going to talk about that in a few minutes, I think. So we've been talking about that since 2007, New Year's, when Dave and I first met. It's waiting for its implosion. It's just because we were the world's reserve currency, we've been able to hold off a lot longer than anybody would have expected. Inflation is a sneaky way of paying off Uncle Sam's debts. And so on the one hand, he's got to do that. On the other hand, we're in trouble.
Thank you. The beauty of having so much talent on the stage is we can pivot seamlessly from topic to topic. So general, we live in the new economy, right? And it's all about technology. It's not a vertical, it's a horizontal. Touches all aspects of business and life. So in this backdrop, what's the role of cybersecurity? We're so vulnerable. Our lives are critically dependent on that conduit. And with the nightmare on crypto, where billions, 10s, 20, 30, 60 billion dollars just disappear. What's going on with cybersecurity? How worried should we be? How will it affect the economy?
I think it's important to recognize, I know all of you in here do, but I'll just foot stomp it. Cyber attacks are increasing in scope and scale and sophistication, with U.S. in particular facing an epidemic ransomware attacks. And these growth in attacks could cause significant damage and sustained disruption, as you just mentioned, which certainly have the potential to spill over to financial markets and the economy. Cyber crime today is a major threat, not just for the private sector and for individuals, but for the government and the nation as a whole. I'm reminded this happened about 3 years ago at one of the major aerospace power conferences. There was a picture that was put up on stage of a front aspect view of the F-35, latest stealth fighter. And it looked just like the front-on view of an F-35, except here's the deal. The left half of it was an F-35. The right half of it was a Chinese J-31.
Wow.
And so the Chinese are masters at stealing through cyber means. I think, all of you are aware of that. So as we move into the future, state-sponsored attacks are likely to increase. Also key to be concerned with are attacks on our critical infrastructure. You all witnessed this, if you recall, the attack on the Colonial Pipeline with a Russian cyber group that occurred in 2021. Russia, by the way, is considered by U.S. intelligence to be the most formidable foreign cyber actor with a flexible arsenal of producing carefully tailored effects. Now, let me not just be a Debbie Downer here, because I will offer to you that one has not seen a whole lot of Russian cyber operations emanate from their conflict in Ukraine. That's not by accident. So there are some pretty serious efforts and capabilities that reside in the government with respect to dealing with foreign nations. But then when it comes to attacks against private and personal infrastructure, the U.S. government's been hands-off. But that's obviously an area of concern, hugely impactful. And as we move into the information age to a greater degree, all of you see the potential for disruption and deception that occurs in the media and where you acquire all your sources of information, those smartphones that you're holding in your hands out there and looking at. So that's another area we have to be very, very concerned about. It's a huge area, and fortunately, there's a lot being put into the subject of cybersecurity. But it's also one of the areas we have one of the big deficits in talent as well.
Dave, I hope you don't mind. I'm going to take you adrift on the policy front, away from monetary and fiscal. But Chairman Powell, in his Brookings Institution speech, talked about labor policy reform. We have a labor shortage, right? That's leading to wage inflation. Do you have any thoughts based on your long history in public policy making about immigration or what? How do you expand the toolkit away from monetary and fiscal, a couple of which really, QE has been proven to be ineffective for spurring economic growth, and MMT, I do agree with you, is what's a polite way of saying? It's a load of something. What about the...
Okay, first, education. The United States is not top 25 in the world in K through 12 education. We have one of the best, collegiate university systems in the world. People come from all over the world to come here, but we're not top 25. And frankly, we've gone down in the last 2 years because of the implications of COVID and how COVID was being handled. Secondly, we don't teach two things in high school that should be mandatory. Number one, financial literacy, and number two, civic responsibility. And in my view, the failure to teach those two things is one of the reasons that we have a dysfunctional democracy and people don't understand how serious the implications are of our finances spinning out of control, escalating deficits, debt to GDP, et cetera. Secondly, training. We need to do much more with regard to training, especially continuous learning. College is not for everybody. It's not for everybody. And the fact is we have needs in other aspects of the economy dealing with the trades. The Germans learned this a long time ago. The Germans learned that you need to match what the macroeconomic needs of the economy are with the skills, knowledge, and interest of the individuals, and you need to try to match those, all right? We have a situation now, we're talking about giving away $400 billion to $1 trillion plus in student debt, which, number one, I will tell you right now, and I said it from the day one that the President said it, is blatantly unconstitutional. No President of the United States has the authority to dispose of $400 billion to $1 trillion in assets. And what is the largest asset on the federal government's balance sheet? Student loans. That's the largest asset on the balance sheet. But what about people that didn't go to college? Or what about people who paid off their debt? Immigration. We are by ourselves out in left field with regard to immigration policy. Most Western countries have recognized that you need to match the macroeconomic needs of the economy with your immigration policy. And yes, I'm all for having asylum for people who face political discrimination. But the United States has a much better economy, much better opportunity than virtually any nation on earth. Not all nations, but virtually any nation on earth. And if you're going to provide asylum for people who just want to come here for a better life, you have no limit. And so one of the things that we have to do is we have to secure the border. We have to have more temporary work permits, because there are certain times of the year, like the summer, where you have a lot of work that needs to be done, or when you're trying to get the crops in. Certain times of the year you need to allow people to come in and let them go back home, which many do, all right? We need to have a separation between a pathway to citizenship and a pathway to legal status. You shouldn't be able to jump the line and become a citizen if you broke the law to get in here, with the exception of the dreamers. The dreamers are young people who didn't break the law, their parents did. And we shouldn't penalize the dreamers for something their parents did. But you have to secure the border. You have to revise immigration policy to link it to macroeconomic needs. Let's take Canada as an example, to the north of us. You can immigrate pretty easily into Canada if you have $1 million in net worth. Because they don't want to bring people in that are going to be dependent on their welfare system. And the fact is, what's going on right now is we're not matching the needs of the economy with our immigration policy. And in fact, what's happening is it's not only a fiscal challenge to the federal government, it's a fiscal challenge to the state and local government. And it's providing a perverse incentive that needs to be addressed. So, and again, the Fed has nothing to do with any of this.
You're so passionate about this.
Yeah.
Love it. Yeah, please.
I wanted to jump in on the cybersecurity issue. I spent quite a lot of time on the electromagnetic pulse, working with the governments to try to figure out how we would solve this issue. And I would say that the electromagnetic pulse, which is an EMP, which is basically a nuclear weapon that goes off in the sky, shuts down the entire grid. The reason that I took this on for probably 3-4 years of my life was because I saw this as the biggest threat basically facing humanity. And certainly Putin has been saber-rattling and mentioning that he's not afraid to use such technologies, and it certainly falls into cyber technology. So I would say that one of the most important things we need to do, and I know that myself and other colleagues have been saying this for years, is to harden our grid. Because without a hardened grid, when we do go to war, when we do have those sudden cyber attacks, we're sitting ducks. And at this point, we are sitting ducks. We still are not protected or prepared. We always wait until things go bad before we actually wake up and find a solution, unfortunately.
Jen, you have the mic, so I'll stay with you. You have an impressive track record for calling downturns. You sound pretty bearish. I've taken note and heed of that. So what can we do to prepare? How can investors stay safe?
Well, get out of debt and save your money. Keep your powder dry for times ahead. Next spring and fall, I believe there'll be some pretty amazing deals, and when that capitulation comes, you'll know. I think that, and I'm assuming Dave would probably agree with me on this, it's not as if it's just going to, when you have a massive debt bubble as big as the bubble that we have now, it's not just going to be one pop. It's going to take a while for everything to get back to where it should be, and the forest has to burn for new trees to grow. It will seem awful. It will seem like the hardest thing we've gone through, but it's what has to happen. Now, do we have the political will for that to happen? No. Long before the fire is really raging, we will have everybody stomping on their seats in Washington, yelling and demanding quantitative easing. And the quantitative easing is just, as I see it, one of the three parts to the stool that has caused this crazy, out-of-control inflation. And one of it is, as I said, the money printing that Dave and I have been talking about. The second is the war and Putin's war, which you've been talking about, I think has already been resolved to some extent, which is being able to import and get everything for reasonable prices because of COVID. So COVID has, that part of the stool, thank God, is already starting to work itself out. But the big part, which is the quantitative easing, that's really still going to cause a lot
David,
of
I'm going to
trouble.
be the tough time cop. I have the 10-minute warning before we need to wind down. I'm going to ask the general a question, perhaps a couple of minutes. Then I'm going to do a quick round with all three of you, and then an even quicker round, and hopefully I can sneak in one or two questions from the audience. So, sir, my question for you is, in the midterm elections, neither security nor defense was a big point of discussion or debate. Do you see that changing in a couple of years? Who might have the edge in terms of policy or perspectives or insights on those topics?
Yeah, no, thank you for that. And you're right. It was not the defense, and where we are in terms of our nation's security was not mentioned by either side. That's of concern, and I'll tell you why. How many of you in this room know, for example, that the United States Air Force is the oldest, the smallest, and the least ready it's ever been in its 75-year history? Okay, well, that's more than I thought. The problem is, here we are in a situation where we have less than half the number of fighter squadrons we had when we won Desert Storm in 1991. We have 1/3 the number of bombers. And the current plans that the Air Force has is to divest 1,500 more aircraft while only buying 500 for a net decrease of 1,000 over the next 5 years. What's 5 and 22? 27. That is the year, 2027, when most postulate the Chinese will have the ability to successfully pull off an invasion of Taiwan. So how are we doing? Should we be paying more attention to revitalizing the decline of our defense forces? This is one of the reasons Putin did what he did. He saw that the United States didn't have the capacity, we could put will aside for a second, with respect to any move in Ukraine, and he went ahead and did it. And you can bet that Xi is looking at this as well. So one of my concerns is the decline in our security. All of us can argue and have different positions about, the relative balance between guns versus butter. But let me remind you that you can, some people always will argue with the Constitution, but here's what it says in the preamble, that we form this government to, quote, provide for the common defense, comma, promote the general welfare, unquote. Unfortunately, Congress seems to act like it's the other way around. I could go on for hours, but I know we have a time crunch, so.
Please don't. 60 seconds apiece. I'm looking for final closing thoughts. and I will stick to the time limit. David?
Fiscal policy, which is tax and spending, is out of control. Spending has grown dramatically in the last couple of years. Mandatory spending, which includes all the social insurance programs, is growing much faster than discretionary spending, which is defense and non-defense. Debt to GDP, total debt to GDP is at a record level, rising rapidly because of known demographic trends and rising healthcare costs. Total debt to GDP, which is state, which is government as well as the private sector as well as individuals, which Jen alluded to, is an all-time record, rising. We got rising interest rates. Inflation was fueled by several things: a 180-degree turn in energy policy, out of control spending, and supply chain challenges. Did Ukraine have an impact? Yeah, but highly insignificant as compared to the first three. So, last thing, I believe that the only way we're going to get control of the nation's finances is a constitutional amendment that limits how much debt we can take on as a percentage of the economy, which is the metric that matters, how much debt is a percentage of the economy, absent a formal declaration of war, which we haven't done since World War II, or certain unexpected emergencies with a supermajority vote in Congress. We have to put our finances in order. If you don't, it threatens our economic, national security, and domestic tranquility over time.
Okay, you owe me 15 seconds
Okay,
based on my hourly rate of speaking engagements. Jen?
Okay.
The U.S. debt to GDP is super high. We're just pushing 128%, which puts us in the 12th highest position of debt to GDP in the world, just behind Libya, Greece, and Lebanon. Lower growth causes a global recession in this interconnected world. We need a total revamp on the growth economy, where our economic system is not dependent on consumers spending on unnecessary products we don't even need. We need a totally new system that encompasses and protects savers, where we conserve what we can for our children rather than borrowing for their future. It's selfish, reckless, and an unsustainable way to live. We waste way, way, way too much in a throwaway society. Thrift needs to come back in fashion before it's too late.
General, is the military ready? Are we safe?
Okay, I'm going to give you some time back because I'll be succinct and to the point. From a strategic perspective, what's at play here, as I alluded to, is that the military capacity of the United States to deter conflict has significantly eroded over the past 30 years. And that's why part of why Putin took the actions that he did. He sensed weakness on the part of the United States, and he took advantage of that weakness, and so will she. So the Russian actions should be a wake-up call that we need to rebuild our military. If we don't, both the possibility of war and the possibility that the United States might lose are very real and continue to grow, more likely as the United States military advantages continue to erode if we don't curb them.
Okay, this is super rapid fire mode. I'm going to throw out three questions. I want a yes or a no answer. If it requires a number, come up with a number. If you choose to refrain and not answer, I completely understand. Question number one, when will the next recession end?
Let's realize that it took sometimes a few decades for America, especially in 1929, and also in Japan. I mean, it was several decades. So it can take decades to get back to where we were if something as big and substantial as a debt bubble bursts.
And finally, Trump in 2024?
No. And in fact, I'm involved with a group called No Labels,
Yes.
which is for Democrats, Republicans, and unaffiliated. I'm unaffiliated, even though I've been appointed by both Republican and Democratic presidents, that will run a third option for president and vice president if Donald Trump is the Republican nominee, and if Biden, Harris, or a progressive Democrat is the Democrat nominee. For the first time in the history of the United States, over 70% of the people think we're moving in the wrong direction. Over 50% think our best years are behind us. We need unifiers, we need problem solvers, and none of the ones that I mentioned meet that definition.
Just to round out the experience, I'll take one question from the audience. Dan, just give me a couple of minutes. Sir, you in the middle have been itching to do it. I apologize, sir. Yeah.
Thank you very much. Just two questions. One for the general. Thank you. One for the general. Question is about China and why are we so excited about it? I know it's been in the press that the Taiwan Strait and so on, South China Sea. But if you look at the map, U.S. shipping and other shipping can sort of go around that whole area. So why is it, I mean, they can sort of go around to Philippines and go to Malaysia and all these other places, Australia. So why is that a concern?
Short questions and
Yeah.
sneak in the second one.
Thank you. I'll sneak in second one.
Yeah.
On Ms. Bowden, you mentioned your concerns about debt implosion and so on. Obviously, the Fed has done a lot of quantitative easing, and a lot of that quantitative easing is also purchases mortgages. So in that situation, with the potential for an impending debt implosion, what would you like the Fed to do? Should they just keep holding their mortgages?
Okay, we got the questions.
Thank you.
Short answers.
Okay, short answer.
General and then Jen.
Short answer, I just bought a new car for my wife. It took me a year to get it, and about 5 of the options weren't available, and the reason was because there were no chips available. So someone mentioned it at the very beginning. Taiwan's a source of like 95% of all of the integrated chips that are built. I mean, I know that's a very kind of pedantic answer, but that's one of the principal reasons why we need to be concerned, not to mention the interconnectivity of the economies between the United States and China, which is why it's important to deter conflict from occurring in the first place.
These guys were simply magnificent, so round of applause.
I missed that.
Thank you so much.
You would have said the same thing.
It wasn't.
Thank you very much. Nice
Wow.
Thank you, everyone.
Thank you so much for a great panel.